All right, okay. Good evening, everyone. Okay, welcome to today's webinar. Okay, so today's webinar over here will be focusing on the idea of smart money concept. Okay, there are many different names of how traders actually call this. Some actually call it smart money concept. Some call it supply and demand. Some call it order flow. Okay, but at the end of the day, the principles are more or less the same. Okay, so today I'll be sharing with you this particular strategy and technique on how you can actually use to analyze the market, and of course, a strategy to execute it as well. Okay. Now, I'll jump straight into the session over here, and I'll dive straight into the current market itself to illustrate the principles. Okay. There are some slides that are prepared, but I think overall we'll do as much direct practical examples and sharing on the chart itself. And of course, if you have any questions, feel free to put it into the chat as we progress, and I'll be able to scan the questions from time to time and then answer the questions accordingly. Okay. Now I'm gonna give you a broad understanding of SMC first, right? Or what traders call smart money concept. Okay. Now, for me personally, okay, one thing to note is I use a combination of various techniques together, okay, to actually trade the market, right? So I'm familiar with like Elliott Wave principle. I use Fibonacci's, and of course I also use sometimes the execution of order flow to get involved in trades. But today we'll be focusing very much on like solely using smart money concept as a technique and a strategy. Okay. So the first thing here is also directional bias, right? Now for me, I use Elliott Wave patterns to determine directional bias. But if today you want to solely use the smart money concept to identify directional bias, then you need to be familiar with this thing called structure. Okay, so in a while I'll talk a little bit more in the details, but right now I'm just want to give you an overview, like what are some of the things you need to know. Okay, so we definitely need to understand what structure is. Okay, give me a while. Okay, I realized that. Okay, now it's on. Okay, good. Let me zoom in a little bit so it becomes okay, more focus, yeah. All right, so yeah, I was talking about how directional bias, right, is where we utilize structure to help us establish whether the overall market is in the bullish structure or in the bearish structure, and then that will determine like what direction do we want to focus on. Okay, now we'll talk a little bit about what we call swing highs and swing low as well as we progress on that. Okay, and then once we do that, the next thing is to identify what we call market imbalance, right? Now market imbalance, there's this term that we use called fair value gap, right? Or what we call FVG, is where we use this technique to identify where the market left imbalance behind. Okay, to give you a gist of understanding, market imbalance is basically when the market moves in a particular direction with momentum. Okay, it often leaves behind certain traders that kind of miss out on the opportunity, right? So imagine today you want to buy, but the market just moved up too quickly, so fast, so strong that you did not manage to get all your positions to buy to get in, right? So what will happen is when the market comes back in the future into this area of interest, you'll be interested to get involved in the buy, right? That's like your second chance to get in again. Okay, so that's the principle, that's the understanding behind fair value gap. That's the understanding behind market imbalance. Okay, and then of course we have the core element of things, right? We call it demand and supply. Okay, so SMC traders would call this order block. Okay, and basically order block is the gist of where most of the trade execution is going to take place, right? So I just want you to familiar with some of the terms here, right? And of course, we'll dive into the details of each of this. Okay, so I'll put this here. Now, I'll illustrate here, then we'll go into the charts first, right? I think that's a little bit easier for everyone. Okay, now let's talk about directional bias and talk about structure. Okay, now the first thing you want to understand is the market tends to move in swings, right? Whether is it going up or coming down, the market often, move in waves, right? Up and down, up and down, up and down. Okay, as it's coming down, it can develop something like that. It's never going to be like one way straight up or straight down. It's going to be bouncing up and down. Okay, now in this case here, we can clearly see that the overall trend is going down. Okay, but how do we define that it's a bearish structure? Okay, so we have this element called BOS, right? The term stands for break of structure. Okay, so if you take a look as the market comes down, right, it forms a high, it forms a low, it pulls back, but it did not manage to break above that high. It forms a lower high and then it comes down. It take out the previous low, forming a lower low, and it continue to do that. Okay, so what you are observing over here is that the market continuously take out the previous low, but it did not manage to take out the previous high, right? So this is what we call a break of structure to the downside. Okay, so I've kind of labeled that, right? Kind of have a little bit of annotation over here as well. Okay, we'll call this break of structure, right? The market break and close below that swing high, sorry, that swing low. Okay, and the market puts in what we call a high, okay, a swing high. Okay, and the process repeats, right? The market continues to break the low, establish a new swing high, break the low, and establish a new swing high, right? So as this continue progress, this is what we call a bearish market structure, right? And all you want to be looking out for is sell opportunity whenever the market pull back, look for sell. Okay, now if you flip this, it's the same, right? Vice versa, if the market is going up, then you want to be looking at buy side, right? So in this event, right, when the market starts to come back, something like that, okay, just scenario play a little bit, right? Now at this moment, where the market is currently here and we kind of form, this high, this low, this mini high, this mini low. At this moment here, okay, just give you some time to kind of like, think a little bit, okay? What do you think the current market structure is when price is here and it has developed, this mini highs and mini lows, right? Just have your answer to yourself and then I'll kind of tell you the, the perspective of things, right? So I give you, a couple of seconds to go and figure out, right? What do you think the market structure is when price has developed up to this point, right? Now, bear in mind, in the order flow SMC principle, the market is either a bullish market structure or a bearish market structure, right? There's no such thing as its range, right? There's no such thing. In the principle SMC, it's either bullish or bearish. Okay, so I know some of you may say, oh, then this is range, right? No, that's not range. Okay, in SMC itself, we want to define the directional bias either bullish structure or bearish structure. Okay, now if your answer is bearish market structure, you are correct. Okay, why? Okay, let me explain, right? Because what we have so far up to this point, okay, yes, the market has pulled back, but there's some details we want to take note of, right? First thing first, the market took off the previous low, established this as a swing low. Okay, where do you think the swing high is? The swing high is still here. Okay, the market hasn't taken out the previous swing high, and the market hasn't really taken out this current swing low, but it has previously broke the previous swing low, right? So as of all this move here, we are in a bearish market structure. This little move pullback can just be considered as a retracement, as a pullback, right? But the overall structure is still bearish. Now, when do we then say that the market structure has shifted from bearish to bullish? Is when, okay, we have the market take out. That means it needs to break and close the previous swing high. Okay, so at this moment, we will then say the bearish market structure has now shifted towards being a bullish market structure and follow the top process, right? So this one here would then be labeled as BOS, right? That's a new break of structure. Previous swing high has been broken. Now we have shift from bearish to bullish. Okay, and of course, the swing low is here. Okay, so moving forward, right? If the market then pulls back, and it doesn't break that swing low, overall, we are still in a transition from bearish to bullish. And when the market now then able to take out this swing high, okay, we then can say we have a confirmation of a bullish structure. Can follow that thought process. Now, at this point in time, it's a transition. Okay, it's an early sign from bearish to bullish. But when we are able to take out this high at this point in time, we can say we are in a confirmed bullish market structure. Okay, so if today we are in a transition, waiting to buy is a little bit aggressive, but once we have a confirmation, pull back and buy is, what we call a confirmed high probability setup. Okay, so if we get a break of structure, then your swing low would then be shifted over here. You can follow that thought process, right? Overall, that's how we define market structure. Okay, so then that opens up some question, right? Like for example, how do we know if this is our swing high and swing low, or should we take this swing high? Should we take this swing high? Which swing point do we take? Okay, so this is where the fine details comes in. Okay, let me go down to an example over here, right? Right. So in this case here, if you are taking a look at this move, okay, as of now, let's go back a little bit, right? So the market actually started from this high, and then now it's here. Okay, so I mean, looking at this, it's very clear it's a bearish structure, right? But how do we label and how do we define the entire move? Okay, so at the start, this is where, okay, maybe not the magnitude, right? This is where your swing high is. Okay, so we get a move down, we get a push back up. How do we define and say, is this our swing low? Okay, now obviously you can use an indicator on a chart called fractal to help you determine obvious swing highs and lows. Now, if you don't want, okay, one way to note is, okay, as it pulls back, okay, do we have a minimum 50% retracement? Okay, so in this case here, you can see, right? The market made a move down, it pulls back at least 50%. Then we can say, all right, this is a swing point. It's a significant point. Can follow that? Okay, very straightforward, very mechanical. Then when the market starts to, pull back and then starts to come back down, when we see a break of structure over here, okay, then we can clearly define this, confirm this as a swing low, and then your swing high would now be this point. Okay, so the swing point is, the swing high in this case is the highest retracement that causes the break of structure. Can follow, yeah? So swing high in this case, again, I repeat, is the highest price, highest retracement that causes the break of structure. Okay, so we follow through a little bit with price development. So the market break of structure made a low, pull back a little bit. Is this considered a swing point? Is this a swing point? Again, how to check it, how to define it. You take FIB, swing high, swing low. That is no 50% pullback. Not even close, right? So that's not a swing low, that's not a swing high. The market continue to drop and then do a pullback. Then obviously this one here comes back more than 50%, right? Okay, so then we have this as a swing low. This pulls back here. We'll never know where the swing high is until we get a break of structure. Can follow that thought process. Okay, so we know that this is a low, but we can only know this is a swing high until we get a break of structure here. Okay, why? Because the break of structure here would then define this as a swing high, the highest retracement price that causes a break of structure. Can follow that thought process, right? So same thing happens. Price break of structure, we have a pullback. Is that a swing point? You pull FIB, swing high, swing low. Didn't really come towards 50, it came close, but kind of a bit of a gap. We don't take it as a swing point. Again, we continue to move down and then we have another pullback. This one here is very obvious, 50% mark, right? So what we have, swing low, market pullback. We don't know this is a swing high until the market breaks this structure. Can follow that again, right? So it's repetitive, right? So this swing low here becomes a break of structure. This now became a swing high, right? Why? Highest point of a retracement that causes the break of structure. Swing high, break of structure, right? So the market keeps going down all the way, okay? So up to this point here, is this a swing low? Okay, is this a swing low? We don't know because this is definitely not a 50% pullback, right? We need to continue to see how price develop, right? So price going to develop. In this case, you're starting to pull back. Okay, where is the 50% mark? There, right? So until the market is able to pull back close towards the 50, then we know this is a swing low. But until then, we can't define that's a swing low. Okay, and up to this point, what structure are we in? Bearish. Okay, we're in a bearish market structure. Market continue to pull back. It came very, very close. Okay, it doesn't necessarily need to like tag it or what. You just need to come close to that, right? Rough estimation. So then we know, all right, this is definitely a swing low. Is this a swing high? We don't know yet, right? Because a swing high is only defined if we can get a break of structure. And follow the top process, right? So we continue to develop, right? We haven't get a break of structure. We have a 50% mark, okay? So let me just tag a little bit. This is definitely a swing low. This one, we don't know a swing high yet. At this point, we are still in a bearish market structure, okay? And then the market continue to develop. Okay, we get another pullback, right? So definitely this is not a swing high. Are we in a bullish market structure? No, we are still in a bearish market structure, right? This swing high hasn't been taken up. Then you might ask, hey, what about this move here? Isn't it like higher high, higher low? Yes, it's an inner structure. Okay, it's an internal structure, but from a 4-hour perspective, we are still bearish. Can follow the top process, right? So short term, you can take the buy, but long term, we still look for sell. Okay, because we want to follow the overall market structure direction. Okay, so this continue to develop. Let me just play forward a little bit faster. Okay, right. So at this point in time, okay, let me extend this a bit. We have a break and close. Okay, so this one here starts to become a break of structure. No longer a swing high because the market managed to break and close above this previous swing high. Right. So what does it mean? It's a potential transition. Not confirmed yet, but it's a transition from bearish to bullish, right? And of course, with that break of structure over there, we can then clearly define this as our swing low. Can follow the top process, right? So I'll just play out a little bit more to where the current market price is. Okay, we are here today. Now, is this a swing high? We don't know yet, right? So what we do, we pull fib, swing high, swing low to swing high. We didn't really come close to 50%. So based on market structure right now, we don't have a swing high yet. We have a clear swing low here. We don't have a swing high. We are in a transition from bearish to bullish market structure. Can follow the top process, right? Okay. Now, we'll not dive into the inner structure first, right? Because that would then be like, playing with multiple time frames, right? That's where fractal in nature comes in. But at least for now, I want you to be very clear in terms of how we in SMC define directional bias, right? So right now we're in a transition from bearish to bullish. So our market directional structure or directional bias here is slanting towards bullish. Can follow me? Okay. So that's how we look at things. Okay. So with that said, okay, I want to introduce to you in terms of like structure. Now you understand swing low, swing highs, how to define all this. I want to introduce you to the principle of discount and premium. Okay, so in SMC, we use a very simple technique of 50% mark to denote what we call discount and premium. Okay, now if today we're in a bullish market structure, right? So let me put in a notation here as well. So I just put this directional bias transition from bearish to bullish. Okay. So what this means, of course, then we'll be slanting more towards like potentially buy opportunity, right? Then that's where the discount and premium concept comes in. Okay, today, if you want to look for buy opportunities under SMC, you always want to focus on discount area to be buying, right? You want to be buying at cheap prices. Today, if you want to sell something expensive. Okay, so we have this principle where anything below the 50% is considered a discount zone, and anything above the 50% is called a premium zone. Okay, so today, if you're looking for buy opportunity, you don't want to be buying anything above 50. You only want to be buying if the market starts to transit into a discount zone, but not breaking the swing low. Can follow the top of that, because if the market breaks this swing low, we're no longer in the bullish market structure. Right now, we are in a transition. Anything above this low, we are still bullish, or we are transiting into the bullish. Can follow all this thought process, right? Okay, so premium and discount is quite straightforward. You take from swing low to potentially where the market is at this moment, right? Ideally, this would want to be a swing structure, right? But of course, if this is going to pull back towards 50, then this becomes a swing high, right? That becomes a swing structure. Then, of course, you have your premium and discount. Can follow that? Okay, so that's the concept of premium and discount. Okay, so all this are building into what we call directional bias and kind of pinpoint the area that we're going to be interested in looking for opportunities to trade. Okay, so as the market, right, you need to probably visualize a little bit here, right? As the market continued to pull back, okay, I'll use this tool. As the market continue to pull back, okay, it's going to form an inner bearish structure. Okay, short term, you form lower low, lower high, you get a break of structure as it goes lower. That's what we call an inner break of structure. Inner bearish structure, right? So I'll just drop a horizontal line to mark the premium discount. Okay, so all the way as we're building this, right? I want you to see how we define the directional bias using this principle of structure, where we have the 4-hour, which is the primary time frame as of this example, and then we have the internal structure, which is on the lower time frame, right? Whether it's H1 or 20 minutes, etc. Okay. So as we progress into the discount zone, how do we know where to get involved in a buy? Okay, when do we get in? What is the conditions? What are the criteria? Okay, of course, the first criteria is, it needs to be in the discount zone. That's one, right? But that's like so big, right? How then do we define, right? That's where the second phase comes in, right? Just like I mentioned, you need to understand fair value gap, you need to understand market imbalance. You want to then identify your order block. Okay, so all this starts to come in. Okay, so first thing first, right? How do we identify fair value gap? Okay, I mean, in this case here, we really don't have an obvious fair value gap that is still valid. There are some as it progresses, but they're all kind of like taken care of. Okay, so let me very quickly maybe jump to this one. I think pound dollar, right? Based on where we are right now, you can very clearly see from this low to this high, we have that 50% mark. I'll move fast a little bit. Okay, but at the same time, you can see this as another example. Okay, so we have this as a swing low. Okay, we have this as a swing high because this pullback comes towards 50%. We have a break of structure over here. I think that's very clear. Okay, so with this break of structure, where is the lowest retracement that causes the break of structure here, right? So that becomes your new swing low, and then market make a move. Okay, so we are definitely in a bullish market structure. Okay, because we have a break of structure to the upside, right? Okay, so if today we want to be looking for buy opportunity, we want to wait for a 50% mark, right? That's basically where your discount area is gonna be. Okay, now with all that said, okay, that's where you want to then now start to look out for, do I have a fair value gap? Okay, just extend this. Okay, how do we define a fair value gap? How do we identify where the fair value gap is? Okay, so today if you zoom in a little bit, right? Fair value gap is a 3-candle pattern. Okay, that is cause and leave behind when there is momentum in the market. Now, if you take a look at this candle here, okay, I may need to zoom in a little bit more. if you look at this candle here, you do observe that this high and this low did not overlap. Okay, so this middle candle, the one on the left and the one on the right, did not overlap, right? The high here and the low here leaves behind a gap. Okay, we call this fair value gap or market imbalance, right? Usually I'll just use a rectangle tool and then just draw something like that. Okay, fair value gap. Okay, can follow that, right? So what does it mean, right? It just basically just tells me that, all right, this momentum, this push carries high momentum, and there's a very good chance the market will eventually come back towards this area. Now, obviously, it's not going to be 100%, but it acts like a magnet. It tends to attract price towards that because there is an imbalance. It will want to balance it out. Okay, so based on those principles, I follow that. Right? So why is identification of fair value gap important, right? Now, there might be fair value gap at the top, but I don't care. Why? Because today, if you are looking at buy, I'm only interested in the discount area. So anything that's happening at the top, none of my concern. Okay? So up to this point, you can understand, right? All this principle, how to identify. Now, once we identify fair value gap, some traders are a little bit more aggressive. They'll be looking at trades around the fair value gap. Okay? But you want to also identify order block. Okay, so in this case, if we're buying, we're in a bullish market structure. Okay, you want to be identify order blocks as demand, right? Basically at the bottom, right? You don't want to be identify order block as supply because that's not of concern. Okay, how do we identify order block? How do we identify demand in this case, right? Now, one way to look out for things is if today the market is going up, right? You can see here fair gap, bullish candle, bullish candle. The bearish candle that creates the fair value gap, prior to the fair value gap, often can be kind of determined and denote as your demand zone. Can follow the thought process? So far, so good, right? Okay. So again, I repeat, if this is going up, we have a fair value gap identified. The bearish candle, which is the opposite direction, that creates the fair value gap is your order block. Okay, so that's where we define our demand zone. Okay, so with all this said, okay, today if you're just simply the easiest way to trade it is to just wait for price to pull back into demand zone and then get involved in the buy. Okay, now that is using a uni time frame analysis, applying smart money concept. Can follow that, right? Up to this point, right? So very, very straightforward if you're using just one single uni time frame, right? You look for buy there, you can put a pending order. Your stop loss can place just below that demand zone. You can place it at the swing low, depending on how conservative you want to be. Obviously, the safest place to put your stop is the swing low, right? Because if the market breaks that swing low, if the market comes down, takes out the swing low, we're no longer in a bullish market structure. And that's the reason to get out of a buy. Okay. But if today you want to gun for a better risk to reward ratio, then of course you can look at stop loss just below that demand area. Okay, I mean there's no fixed answer to this, right? It really depends on how do you want to approach it? Are you more of an aggressive style or are you more conservative style, right? Take profit. The simplest way to do it is your previous high. That's it. Okay, so you get a pretty decent risk to reward ratio. Okay, I mean, if you extend this a little bit lower, your risk reward is like 1.9, close to 2. But if you are taking your stop, a little bit more aggressive, you can go up to maybe 1 to 3.8, 1 to 4. Okay, now that's all this that I explained is looking at it from a single lens, right? Looking at it from a one time frame perspective. Okay, now what you can look up for is today you can play around with multi-time frame, right? You can look for confirmation like H4. This is what we're looking at. Okay, can we then look at a lower time frame to get involved in the trade slightly earlier with the way better risk reward? Potentially, yes, right? There are two ways to play in the short term. Okay, one is with this analysis in mind, right? What are we expecting? We're expecting price to come back towards the fair value gap. We're expecting price to come back towards the discounted area, then only continue, right? So in the short term, we can consider this question. Can we capitalize on this sell side? Okay, the answer is yes, right? So if today you want to look at short-term sell, again, bear in mind, where do you want to sell? You only want to sell at premium areas, okay? Which means that anything above here, you can look for short-term sell, okay? If the market has crossed the premium zone, and then you say, oh, we still have a little bit of room here, right? You probably do not want to still look for sell at that area, right? So again, premium discount is important. Okay. So of course, in this case, in this example, as of now, we're speaking, right? We're in a premium area, okay? We are expecting market to come down and fulfill this market gap, okay? And therefore, we can consider look for short-term sell. Okay, follow the top process, right? So if today I go down to the lower time frame on the H1, okay, the same principle apply. Do you anyhow sell? No. You want to ensure that you have a H1 bearish market structure to complement your higher time frame pullback. Okay, so that's what we talk about multi-time frame, right? So in the H1, if you zoom in a little bit, okay, what do we have over here? Okay, we obviously have a little bit of a high here, right? Obvious swing high. Okay, H1 high. What do we have? Okay, the market is coming down. Is this a swing low as the market pull back? We do a quick check. Okay, you pull fit, swing high to swing low. Doesn't really touch it, but you know, you came quite close, right? You can look at the price here. The 50% is 1.2773. The high of a retracement is 1.2771, right? It's like 2 pips. Okay, so it really depends on how strict you are, okay? But for this example purposes, we're just going to take it as, yeah, this is going to be a swing low. The pullback happens. The break of structure happens. Okay, let me update this. Can follow the top process so far, right? Okay, so that's a break of structure. So if that's a break of structure, our swing high is no longer there, but our swing high will now be here. Okay, and with that break of structure, okay, with that break of structure, what do we have? We have now a H1 confirmed bearish market structure. Can follow the top process, right? So again, SMC, a lot of things here are quite mechanical. Okay. But right now, if you want to sell, do we have a fair value gap on this time frame? We don't. Okay. You might say, okay, what about this here, right? So let me zoom in a little bit. Okay, you might ask this question, right? What about this little gap? Okay, that's created from this crew candle. Initially, yes, but this candle has filled it. You can see, right? We don't trade a fair value gap that has been filled. Okay, we only want to focus on the fair value gap that is not filled. Okay, so what this means is that at this moment, while we have an alignment in terms of the H1 direction as well as the higher time frame pullback, we don't have a fair value gap. Okay, so at this moment, we do not want to be jumping onto the trades yet, right? We will always want to wait for the fair value gap. Okay, so you visualize a little bit, right? Now, let's say, you know, this continue to drop and then we start to see some fair value gap here, you know, and then it starts to pull back. Of course, you have your demand, you have your discount and premium zone as well. Okay, if you want to sell, you sell a premium. Okay, so let's say, you know, you continue to drop and then it creates a fair value gap here. Okay, and this fair value gap, if it's in the, okay, I'll help you visualize it. Okay, or else it's very, very difficult for everyone. Okay, so let's do a little bit of a forecast here. Okay, just for illustration purposes, let's say this is the drop. Okay, and then after that, the market starts to give us some sign of a pullback. Okay, so suppose in the future, that's how the market develops, right? Okay, so what do you have? Okay, very, very obvious here. You have your fair value gap. Okay, now if that's going to be a fair value gap, still remember how we define order block? Okay, the opposing candle, because this is coming down, the green candle that creates the fair value gap becomes your demand area. Supply area, your order block. Okay, so of course, if you want, you can actually string this a little bit here. Okay, can I adjust that a little bit, right? It's not like fixed, right? But that's the guideline. Okay, and of course, do we have this at premium area or discount area? We have it above 50, so that's definitely premium. Okay, so if you have something like that set up, right, then you open up the possibility of taking a sell trade here. Of course, you can see, right? If you put your stop here, it's about 15 pips, pretty tight. Okay, you may want to then just extend it to where your swing high is. That's going to give you maybe about 35 pips. And then where you're going to put your target, you can go back to the H4. Okay, and then you can look for target, maybe conservative, just aim for the 50% mark. Or if you want to go for, a little bit more, you can aim for the opposing fair value gap area. Can follow the top process, right? Okay. So this is basically in a nutshell, right? Of course, there are some more complex stuff in SMC, but I don't want to go there, right? Because I think you want to keep things simple so that you can repeat the process, right? You want to keep things simple so you can understand the elements that goes into it. And that's really the core of SMC, right? The principles behind it, right? You have market structure for direction, okay? Then of course we talk about inner structure, higher time frame structure. We talk about premium and discount. We talk about fair value gap. We talk about order blocks, right? And then your entry is essentially just using the order blocks to get it. Okay. Of course, there are variations to it, right? Some traders would use Fibonacci as well and things like that. You can look for alignment. Okay, like for example, you go back to the lower time frame, right? Suppose this is the high, this is a low. The pullbacks happens. You can also utilize like Fibonacci. For me here, sometimes I look at the 71, right? Which, in this case, perfect alignment, okay? You have the 71, you have the order block, you have fair gap there. Kind of similar, right? So there is that flexibility element as well, depending on what things you want to add in to complement the strategy, right? But today, what I'm covering here is really the core aspect, or I would say the foundation of order block, okay? The foundation of order flow, the foundation of SMC. Okay. So let's take a look and see if we have any other examples we can talk about. Okay. Let's talk about this, right? Okay. So this one here is where there is that element of complexity in this case, because if you take a look, from this low here is obviously a bullish market structure, right? Okay, so we have this push up, this one here is a low. Okay, this is definitely a break of structure. Okay, this one I think I extended a little bit. Oh, wrong too. Okay. This one here definitely a swing low, right? Okay, so that's a break of structure. The market push up. Is this a pullback? Let's do a quick check. Do we have a 50%? Okay, I mean, it came quite close. Let's take it as is, right? And then, of course, we have another break of structure over here. Okay, and then, of course, that would then establish as your swing low, right? The lowest point that causes a break of structure, that's your swing low. Okay, so as of now, what we have is this. Okay, yes, the market is pulling back, but technically from the definition of market structure, we are in a bullish market structure. Okay, and of course, this is already quite clear swing high. Can follow the top process. Okay, so right now, if you're looking at this angle here, we're looking at buy opportunity, right? So of course, the market pull back a little bit. We get a nice little reaction over here. Okay, you can see where the market pulls back into as well, right? This is a fair value gap here. Okay, let me just adjust that as well. Okay, and then of course the red candle and then the wick here, that's your entire demand block. Okay, so very nice little reaction. And then of course the market bounce, right? And internally, right? So overall from a H4, you can see we are in a bullish market structure, right? Now, if you go down to the internal, right? If you go to the H1 here, you can also see on the lower time frame, as this pullback is happening, right? We're in a bearish market structure on a H1. And then if I just annotate a little bit, right, this would be your previous swing high on the H1. Okay, kind of like replay back then, right? That would be how your swing high is, right? And of course, you have breakout structure, that's your swing high. Okay. So at this point, if I play back a little bit, right, on the higher time frame of H1, we are bullish. The market came into the demand zone. Okay. Obviously, you can just put the pending order, buy demand, put the stop loss below, and then look at it from a single time frame perspective. But at the same time, you play around with multiple time frame. You can say, okay, let's wait for maybe some confirmation on a lower time frame, right? So if today you want to wait for confirmation on a lower time frame, then what do you need? Okay, you have identified your swing high. For a confirmation on a lower time frame, you need also the H1 to change into a bullish market structure, right? Because as of now, the H1 is bearish. For it to change into a bullish, for it to transition into a bullish market structure, you need the market to take out the swing high and follow the top process. Okay, so as we play forward a little bit, right, you can see the market starts to establish highs, and here it break and close above the high. Okay, so at this point in time, this is what we call a H1 breakout structure. And follow the top process. If there's a H1 breakout structure, then obviously where is the lowest point that causes the breakout structure? It will be here. Okay, so that would be your H1 low. And follow the top process. Okay, so you have H1 low, you have your breakout structure. Now, if today you want to look for buy opportunity using the H1, same process, right? If today the market is here, it starts to pull back, we do a discount and premium zone. Okay. So if today we want to be buying it, because on H4 we have bullish market structure, on H1 we have just transit into a bullish market structure. We want to focus on buy opportunity. We want to only focus on discount area. Okay. So where are some of the areas we can look out for? You can see here we have some fair value gaps. Okay, this is a little bit subjective because the market did touch it. But if you go into the details of this here, you can see that we did not really tag, more than half of this fair gap, right? So again, a little bit subjective. But again, nothing is going to be perfect in the market, right? So if that's going to be a fair gap, where's your demand? Here. Okay, so kind of have a little bit of overlapping here, right? As we draw, right? So the bigger one is on H4, then this is on the H1. Okay, so if today you're kind of looking for the alignment, right? Where will your opportunity to get involved in the buy using this strategy here will be somewhere around the demand zone. Again, your stop, you can put it below the demand zone, but that's going to give you like what? 12 bits, 15 bits, a little bit tight, right? You can consider using the H1 swing low. Okay, where will your target be? You'll be aiming all the way back at where your previous swing high on H4 is going to be. Okay. So again, a very, very healthy risk reward of 1 to 3 point something, right? So of course, if you play forward, this is where the market is right now. Okay, so sorry, my bad. It extended a little bit, okay, but I think everything is still the same, right? It didn't really change much. Basically, just now we were here, the market continued to move higher, and then now it's pulled back. Okay, so I think overall it's still there. Can follow? Okay, so this is how it looks like. Okay, now, but for me, I will not take this buy because as I mentioned at the start of today's session, I don't only look at SMC. Okay, I look at multiple techniques to kind of like define the direction of our focus, right? So if you're purely on SMC itself, this would be a pretty decent buy opportunity. Okay, who knows? Maybe it'll work out as well, right? When the market come into demand and then give you a bounce, you never know. Okay, but I just want to illustrate the practical aspect of it. Okay, now if you take a look at some other assets like gold, okay, can you apply the same principle as well? The answer is yes. Okay, so if you take a look at gold here, if you start to mark it out, right, that's an obvious low on the H4. Okay, I'm just giving you more example, right? So this one here, you have a high, you have this pullback. I think quite obvious. We have that 50% mark. Okay, so this is definitely a breakout structure. Okay, and then that would form your low here. Okay, And then, of course, we made another high. The pullback is obviously 50% with the break of structure. Okay, and of course, this is a swing low that now turns into a break of structure. Can follow that thought process. So this becomes your swing high. Okay, so from this perspective here, we are transiting from a bullish market structure to now a bearish market structure. Okay, is this a pullback? Is this a swing? How do we measure 50% mark? We don't have it yet. Okay, so we can't say that this is a swing low at the moment. Can follow that thought process, but we have a break and close. So we're in a transition at the moment. So if the market continues to pull back, okay, then yeah, this would start to establish as a swing low. Okay, so we do a little bit of forward planning, right? Where is the 50% mark? The 50% mark is here. Okay, let me drop it in. So today, if you're looking at transition to a bearish market structure, we're interested in the sell side of things. We want to be focused on premium areas to look for sell. Okay, so anything below, we're not interested. We're only interested in the premium side. Okay, do we have an obvious fair value gap? I think this is super clear here. That is definitely a fair value gap. Note off. Which one is the opposing candle? You can see one green one over there. So that naturally becomes your supply zone. And follow, right? And everything is happening in the premium area. So if today we are looking at single time frame opportunity to take this trade, this is something that you can set it up. Okay. So again, the flexibility of your stop loss, right? If you put it just below it, but it's a bit tight, right? So you might want to extend it to this high here. Okay, and of course, you can also all the way on the swing high, right? But of course, your risk reward ratio drops quite a bit if you can't extend your stop loss. Okay, so this one here to me kind of look pretty okay. Okay, so that's on the single time frame. Now today, if you want to look at again shorter time frame while we're waiting for this pullback, can we trade the smaller time frame to the upside? You just repeat the process, right? You go down to your lower time frame. Ask yourself, right? Do you have a clear opportunity to get involved? So in a H1 right now, right? What you see is obviously this one here is a break of structure. Okay, so the market initially has a inner bullish market structure on a H1. Okay, all the way until this is also a break of structure until we get this push down that break this swing low. Okay, so right now on the H1, we are not in a bullish market structure. We're in the transition from initially bullish to bearish. But do we sell here? No. Okay, because if today your primary time frame is H4, you always wait for it to enter premium. Okay, on the H1, so you need to be very clear, right? What is your primary time frame? If your primary time frame is H4, knowing that H1 is just your short time frame, you need to be very clear what's the direction. Because H4 will dictate the direction and say that you want to be looking at a pullback for short term. Okay, so your H1 then would then be interested in the upside only and not selling this here. Can follow that? Right, but right now we don't have a bullish market structure in H1, so you can't really look to buy it. Okay, so again, a little bit of scenario planning. If today the market decides to go back up and break this high, then yeah, we have this as a swing low. The market has retransitioned back into a bullish market structure. Look for your fair gap or the block, pull back, trade it up. Okay, so that's the strategy. And follow, yeah. Hey, yeah, so that's nothing there. Okay. Anything else that we can talk about? Any questions that you guys have? Okay, I'll use one more example here on crude oil. Okay, so very quickly you can see here, this was the previous high. We have a close and break and close above, so that's the break of structure, right? And of course, right now here, this is your current swing low. Okay, so we're in a transition from bearish to potentially bullish. Given if this can pull back a little bit more, okay, we'll put in the 50% mark to mark out where the discounted area is. Okay. And of course, where is your fair value gap? You can look out for. Here we have a little bit here on the fair value gap. Okay. The other fair value gap that's more obvious is obviously this one here, right? Okay. So which one would I take? Again, there's no right answer, right? Because this one can be a potential order block for demand. Okay. And of course, you also have this one here. Okay. Right. So which one would be a better one? I mean, both are okay. The thing is like there's no perfect answer in trading, right? If you want to trade off this here, putting a stop here can be very, very tight. So you may want to, at the end of the day, still extend your stop all the way there, and then maybe a target here, risk to reward 1 to 3. You can ask yourself, is this risk reward something worthwhile for you to take the trade? Okay. Today, if you put your entry here, your stop loss below it, then your risk reward obviously will be way better, right? Okay. So that's that bit of like discretionary decision-making process based on personal preference, right? But here, crude oil is another example to show you. Okay. Now, since we are on this, I also want to explain a small principle that you may want to add it into your smart money understanding, right? There's this thing called liquidity graph. Okay. Okay, I didn't have it set here. Okay, but let's just put it something like that. Now, what's a liquidity grab? Okay, you realize that the market breaks this low, but it did not close below that low. Okay, it breaks it and it bounced off. Okay, so in SMC, we call this principle liquidity grab. Okay, the idea behind it is like, if this is a previous low, right? Then naturally there will be some orders at the bottom, whether is it a breakout orders or is it stop loss orders. They're basically orders hiding behind this low. Okay, and in SMT principle, we call that liquidity. Okay, because orders are basically liquidity in the market where today if you buy or sell, you create liquid in the market, right? So that's what we call liquidity there. So the idea of liquidity grab is where the market tags it, okay, and then bounce. And oftentimes when you see something like that, okay, not 100%, but oftentimes it tends to indicate that, and following, right, a break of structure, it tends to indicate that the true intention of the market is eventually going higher. Okay, so when you have a combination of liquidity grab plus break of structure, that gives you that clue. Okay, but of course you can see over here in this principle, right? We have this liquidity grab, but then here we also didn't really break and close above. We have another liquidity grab. This doesn't count. Okay. If you combine a liquidity grab plus a break of structure, then the probability will be even higher. Okay, so that's one of the principle you can add on to. Okay. Yeah, that's basically what I want to share. Can follow, right? So generally, those are I would say, the core foundation of SMC, right? There are more complex stuff that you can potentially add on to. But I think what I cover today will be the main kind of like bulk of it, right? The main foundation that you definitely need to be very, very, very clear with if today you want to be going down this strategy on SMC. Good. Okay. Melvin asks, can we use H1 as higher time frame and M15 as a lower time frame? Yes, possible as well. Okay. So the time frame works pretty much anyone that you're familiar and comfortable with, right? You can even play around with M15 and M1, but obviously trading on a 1-minute chart is not recommended. Okay. My lowest time frame I would suggest anyone to go to is 15 minutes. Okay, because anything lower than that, you are probably losing out to spread. Okay, so yeah, good question from Melvin. You can definitely do H1 and M15, then you are more of an intraday. Okay, you're more of an intraday. Good. Any other questions? I hope today's sharing session has been clear, giving you some ideas on smart money concept. All good? Yeah, don't see any other questions. Yeah, so if everything is good, I hope today webinar here gave you an idea, give you some clarity in terms of SMC, whether is it going to be something that you would want to use. You probably need to test it out. Okay, go and experience it for yourself, practice it a little bit, see if it aligns with your trading style. And of course, if it does, by all means, work on it, take it up, and then hopefully then today's sharing session will give you that foundational kickstart, right, on using this strategy. Okay, so yeah, with that, okay, I'll just end off today's session. I think you probably need some time to digest those information as well. Yeah, so after this, if let's say in the future we have any opportunities to get in touch again, okay, if you have any questions, feel free to ask me. Oh, okay, I see one question coming in. Can we short gold? Based on this strategy, you probably wouldn't want to short gold now, right? But again, if you play around with different time frame, then that is a very different thing, okay? Because if today your primary time frame is H1, okay, then you have a potential shift in market structure, right? And let's say today on H1, to be honest, we don't really have an obvious fair value gap. You can see we have one here on fair value gap, but that's below your premium, right? Okay, so you don't want to be focusing on a fair value gap, right? So on top of it, there's really no fair value gap here on the H1, right? So I mean, even if you're looking at a lower time frame, you don't want to just jump in anytime, right? You want to follow that process, right? Now, if you go to 15-minute, obviously we don't have anything right now because on the 15-minute, what do you expect? You always expect a pullback first, right? You always expect this pullback. So on the 15-minute, you probably start to see a little bit of an internal 15-minute bullish market structure. Okay. So yeah, to be honest, I wouldn't look to sell gold right now, right? At this point. Okay, so you can see how using guidelines in this strategy itself is important because it can help to give you that decision-making process, right? So you won't jump into any trade just because you feel like it. Okay, you need to have that kind of criteria and conditions being fulfilled before you can take it. Okay, so there are some elements of like what we call objective trading, right? You have like step 1, do this, step 2, do this, kind of like a checklist. Good. Okay, so yeah, I hope that's clear. Generally, that's all from me for today. Okay, so as mentioned, we'll end off today's session, and of course, moving forward, if you guys have any other questions, hopefully we have the opportunity to meet again in future events, future sharing sessions, and then we'll be able to talk a little bit more, share more things with you guys. Okay, so yep, that's all. All the best for trading. Okay, and we'll see you guys real soon again in the future. Okay, good. So good night. See you guys. Bye bye.